Hi, everyone. We'll just give everyone a minute or so to come in from the waiting room before we get started for today's webinar. Hi, everyone. This is Chris Lethbridge from the China-Britain Business Council, and it's great to have you all online for today's CBBC webinar, Success at a Distance, Making China Work from you for the Making China Work for you from the UK. Before we begin, I'd just like to remind everyone that if you have any questions, please use the Q&A function at the bottom of your screen to submit those. So today is the 5th episode in our series entitled Success at a Distance, Making China Work for you from the UK, where we look at the steps that UK businesses can take in the Chinese market while travel restrictions are still in place. Today, we're joined by Isabel from eBri, who will be talking about payments from China. eBri are a financial services company specializing in international cash management solutions, including cross-border payments and FX risk management. We felt that it was important to include a session on taking payments from China because of the complexity of navigating China's restrictions on foreign currency transfers and the bureaucracy that can be involved in getting paid. Unfortunately, a large number of companies get caught out by the payment process after spending considerable time sorting out the details of the border trade deal. Understanding the requirements up front will ensure that you can take small initial steps to secure timely payment. So without further ado, I'd like to welcome Isabel.
Thanks a lot, Chris, and also CBBC for inviting me to speak at this time's webinar series. So let me first share the presentation that I have prepared. Can you see my screen?
Yes, we can. Yeah.
Okay. So let me first start by introducing myself and also our company, eBri. So I run the China West initiatives at eBri, and we are among one of the fastest growing global fintech companies. What we do is that we help small and medium enterprises that do business internationally and offering them the cross-border financial services that they need, including international payments, foreign exchange, local currency accounts, and also trade finance. Up to date, we have over 1,000 employees across 20 countries in 26 offices, and we're an FCA licensed electronic money institution. So in today's presentation, I'll try to explain you from an UK exporter or a UK importer's view, like the considerations around transacting directly in the Chinese counterparty's local currency, Chinese Yuan, and what are the potential benefits that you could get out of that. So I have structured my presentation in 2 different sections. The first part, I will focus on, as an importer sourcing from China, how to better transact with China in terms of payments in, and then I will move on to sellers that are exporting to China, how to send money out of China and then receive your funds abroad. So I thought I would start my presentation first by explaining about the local Chinese currency, the Chinese Yuan, and the different denominations that we often hear across different forums. So the official name of the Chinese currency is renminbi yuan. We stand as RMB. But then in terms of how this currency is trading in the foreign exchange market, because there are still restrictions on where the Chinese currency is traded, we can actually find 3 different denominations of the same currency. So CNY, this refers to the Chinese currency that is purely traded within mainland China. That means excluding Hong Kong and Macau. So this currency, it actually has a daily rate that is fixed by the Central Bank of China, the PBOC, and it's only fully deliverable inside China. Then if we look at from outside China, the access into the RMB, we can distinguish between the non-deliverable CNY and CNH. So CNY non-deliverable, that's one of the forms that the currency is traded outside China, it is free float, meaning that there are not fixings in the daily rates as it happens with the CNY, but the settlement is also always done directly in USD. That's why later on we saw the birth of CN8. So that would be the mirror of the CNY, but outside China. So CN8 is fully liquid outside of China. It's free floating, and it's fully deliverable outside China. So for instance, for IBRI, that we are a UK headquartered company that doesn't have access to the liquidity inside China, we can only access to liquidity in CN8, but not in CNY, which would only have access financial institutions that are actually incorporated and established in mainland China. So throughout my presentation, in order to try not to confuse people with the different denominations, I'll try to, as much as I can, to refer to the Chinese currency commonly as RMB. So first, I want to give you guys a view on what has been the evolution of the dollar RMB rate through the last 10 years. So before 2016, actually, most of the cross-border trade between China and the West was done in USD. Also, because at that time, the RMB was actually pegged to USD, and for a lot of companies in China that were exporting abroad, they prefer to trade in the strong currency, which is the USD. But then, as China started embarking in the process of internationalization of its currency, we've seen how the FX markets have started fluctuating more and more regarding the RMB. So one important inflection point is in October 2016, when the RMB, the Chinese Yuan, became part of the basket of currencies of the International Monetary Fund. So from that on, if you look at the evolution in the last 6 years, we've been seeing more and more double-side volatility in terms of the dollar RMB exchange rate. And we can later on go into detail on how that's gonna impact you as a company that is trading with China. So to highlight a few points here in the chart, right? So in April 2018, that was actually when the dollar RMB dropped to its lowest level, and then RMB was at its strongest point with $1 USD exchanging for 6.25 RMB. Then later on, like with the increasing tensions between China and the US and the hitting of the trade tariffs, in August 2019, we actually saw how the dollar RMB exchange rate peaked at $1 USD exchanging for 7.15 RMB. So you can see how like from the highest point to the lowest point, there has been a fluctuation of almost 15%. And during 2020 and this year, we've seen also how this volatility has continued as well. So I was mentioning just about the process of internationalization of RMB, and I wanted here to briefly illustrate as well on what have been the major milestones in this process. So I will only stop on the last milestone, which is December 2020. But you can see like how as the Chinese yuan has been more and more international, it's also because the Chinese authorities, they've been promoting more and more to its corporates the use of RMB in the cross-border transactions. But previously, one of the issues that companies in China selling to abroad in RMB was the paperwork with the bank. So because companies traditionally export in USD or in other foreign currency, the process to receive those funds from overseas into your domestic bank in China, it was pretty straightforward and simple. But once some companies started switching to receiving RMB directly from abroad, because that was something new for the bank, and then the regulatory requirements were different, the banks actually were asking these companies for a lot more paperwork. And every time the companies received an RMB payment from outside China, they had to go to the bank and submit all the trade-related documentation. So this is something that changed in December last year. The Chinese authorities, they released a notice on further optimizing the cross-border RMB policy. So among the different points included in this guideline, one of it was to facilitate companies receiving RMB from overseas, so that banks would be accepting as well digital documentation versus previously that they have to go physically to the bank. So this guideline was supposed to come into full effect in February of this year, but still effectively, through our conversations with suppliers in China, we're still seeing that some banks are still trying to adapt to this new guideline and then making things easier for their clients to receive RMB directly from abroad. So from an importer's view, right? If you're a company sourcing from China, why would it make sense for you and for your supplier in China to consider about directly transacting into RMB? So for your supplier, the main reason would be to protect themselves against the negative impact of dollar RMB exchange rate. So as I was saying, like in the last 12 months, we have witnessed an increasing appreciation of the RMB, and this is also expected to continue. So for the suppliers, when the RMB is getting stronger and stronger, this a lot of times will turn into higher price increases for their clients, which adds up to the impact of what we already know around the increase in raw materials costs, the increase in the freight costs. So it's always a difficult conversation for the supplier to ask their clients to increase their prices because of the negative effect of the exchange rate. So by invoicing their clients directly in RMB, we can at least minimize the impact of the negative exchange rate in the price. Then as an importer buying from China, one of the main reasons to switch to paying in RMB versus in USD is to ensure that you're gonna receive stable prices from your supplier and avoid what we call one-sided risk, which I will further elaborate on my next slide. Also, by directly paying your supplier in their base currency, you ensure that you have full control on how the foreign exchange risk is controlled. Because the situation that we see with most of the suppliers in China is that because the Chinese financial system is not as developed as in the West, still a lot of companies, they have quite limited sophistication in terms of actively deploying foreign exchange risk management tools in order to manage actively their exchange risk. So what happens is that basically they will price their USD with a buffer to avoid for small fluctuations in the FX rate that could impact their prices. And at the end of the day, this always impacts the buyer, which is indirectly exposed to the RMB. So by directly transacting in your supplier's local currency, you ensure that you have full control on how to manage the foreign exchange risk. And also you get the highest transparency on the base prices of your supplier. So here it's a real case example of a situation of a client of ours in Portugal with their supplier. So you can see in this chart what has been the evolution of the dollar RMB exchange rate throughout the full of 2020 last year. So if we look at the beginning of last year, January the 2nd, right? So at that time, one USD could exchange for 6.97 RMB. And de facto, normally how the suppliers, they set up the prices most of the times is that at the beginning of the year, they will take a budget rate, well, a budget exchange rate that they will use to convert their base prices in RMB into USD for export purposes. So normally this budget rate, it's always slightly below the current market exchange rate because of what I said, right? So to have a little buffer for the supplier because they're not actively doing hedging or managing their foreign exchange risk. So 2020 and the 2 years before, because the exchange rate was consistently above 6.8, the suppliers were actually using a budget rate of 6.8 to exchange their RMB based prices. So to make this quite simple with a numerical example. So let's say that the supplier sells one item with the base price in RMB is 680. So in order to export it abroad, then they will convert it at their budget rate of 6.8, and that will give 100 USD, which is the price that they will be providing to their UK client. So at that time, we can see how the supplier gets an immediate benefit just because of the favorable foreign exchange rates. The client pays 100, but then the supplier will be receiving from January all the way to June, consistent additional profits because of the rates. So the peak of the exchange rate dollar RMB was at the end of May, where one USD could exchange for 7.17 RMB. So what that means is that client will still be paying 100 USD. So the USD prices haven't moved at all for the buyer. So they're quite happy because they think they have stable prices. And the supplier, it's also even happier because not only they're earning the 680 RMB equivalent, which is their base prices, but they're getting additional profit on top because of the foreign exchange, right? So in May 26, they received 717 RMB when they exchanged it versus the 680. So that's additional 37 yuan's profit that they received. So if you look at the gray bubbles underneath, those are showing what is the additional margin that the supplier is receiving because of the favorable exchange rates. But then the situation actually reversed starting second half of last year, right? So in September 15, we saw how not only one USD was not able to exchange for 6.8, but it was even lower. So for one USD, the supplier was only able to get 6.75. So then there was a problem for the supplier, right? Because they were not able to even cover the base prices. So they had to go back to the client and increase their prices from 100 USD to 105. So that they bring the gray bubble, so their profit margin again into like the positive space, right? So this is what we call one-sided risk for the buyer, that when the exchange rates are favorable for the supplier, meaning that the RMB is actually weak versus the USD, the suppliers gains the additional profit, and the supplier doesn't really talk to the buyer about decreasing the prices, obviously. But then when it's the other situation and the RMB keeps strengthening, then the buyer needs to share the loss out of the foreign exchange, which really, if that was the case, and then the buyer is indirectly exposed to dollar RMB, then they might as well actively manage this FX risk themselves and directly exchange from British pound into RMB so that you remove the additional volatility from the USD, which is in this case, not the base currency of neither of the parties in the transaction. So we're seeing like how with the process of internationalization of RMB, actually there has also been like a swift change in the mindset of suppliers in terms of being more open to accept their own currency. Because this might seem counterintuitive, but when at IBRI we started running this initiative with our clients and their suppliers back in 2018, a lot of suppliers, they were still quite reluctant to directly receive their local currency. The reason being, it's because they feel that the RMB was still weak, and obviously because of what I just illustrated, they would be better off receiving USD because then if the exchange rates were favorable, they could always gain like additional profits. But we've seen how the situation has changed, especially since 2020, after the suppliers have seen how the RMB has been strengthening against USD and also the other major currencies. And the China Central Bank has allowed the Chinese Yuan to move with certain freedom without like trying to fix the prices somehow. So what are the reasons for the suppliers now considering to receive RMB and the factors that might impact on that? So first is the hedging capabilities. What happens is that most of the companies in China, they have limited access to hedging from their banks. So for the local banks to give you a hedging line, you first need to have a credit line with them. And even if you have a credit line, most of the companies in China, they would rather borrow money from the bank using that credit line than using it on a hedging. And also, speaking from their mouth, right? What they say is that a lot of times they don't have the security of the timing that the client is gonna pay. Sometimes client might pay them with a bit of delay, but then if they need to settle the foreign exchange contract with their bank, then they need to find the liquidity from elsewhere. So because of these different reasons, the companies don't normally hedge, but if their buyer in the West have more access to hedging and can hedge to help both of them, then the suppliers is more open to consider receiving in RMB. Also, we've seen the factor that suppliers that are based in China's major export hubs, meaning Zhejiang, Guangdong, Jiangsu, so which is basically the southern and southeast provinces of China, they have some more experience in receiving RMB payment from overseas clients, and they are normally more receptive to it versus companies in the northern province, for instance, Shandong. Also, of course, if you're a client that has a stable relationship with your suppliers, you're transacting good volumes with them, they're always willing to adapt to the client's need, right? Because there's a Chinese saying that says that client is always the king. So wherever a client asks, the supplier will always try their best to fulfill the request. Then suppliers that are already working with companies in Southeast Asia, we do have seen that a lot of those countries are already transacting directly with China in RMB. And also some countries that are sanctioned by the US, for instance, Russia, it's also like increasingly transacting in RMB with their Chinese counterparties. One industry, though, that we've seen that it's quite difficult for the suppliers to accept RMB directly, it's the automobile wheels. And I guess this applies also for all the industries in China, where actually the suppliers need to source a significant amount of raw material from abroad. So in the case of automobile wheels, because the raw material is rubber and that's sourced from abroad, we found that most of the suppliers, they're considering USD as their base currency. So in those cases, it actually doesn't make that much sense to switch to RMB because it's not where the supplier's cost base is, right? So in those situations, then it's better that both parties continue transacting in USD. So some common issues that we have found from the suppliers when clients ask them about directly paying them into RMB. So I have summarized here the main three that we often get from our clients and when we speak with their suppliers. First, that the supplier says that they cannot get the VAT refund if they receive payments in RMB. So what does this mean? So what happens is that everything that is manufactured in China is subject to a VAT rate that depending on the product that we're talking about, it can be up to 16%, 16, and on average is normally 13%. But then this is something that you need to pay in advance, but then once you export the finished goods outside China, you can then get the VAT refund from your local tax office. So a lot of times when our clients ask their suppliers, can I pay you in RMB? First, suppliers might not have the context. If they have never received RMB from abroad, then when you talk about RMB, then they normally link it with a local payment. So then think, maybe my client, even though they're based in the UK, they might have an account in China or something, and they just want to pay me locally in RMB. So then they refuse, because obviously if it's a local transaction, they won't be able to get their VAT refund. But even sometimes when the client explained that the RMB would be sent from abroad, there's this misconception for a lot of suppliers that because the RMB is their local currency, they will lose this VAT benefit from their tax office. And that's actually a misconception. As long as you are sending goods abroad and then you're receiving overseas payments for those goods, doesn't matter that it's in USD or in RMB, it's always considered a foreign currency, and the suppliers can equally get their VAT refund. Another question that is very often, it's suppliers complaining that the bank is asking them for a lot more work when they start receiving in RMB. So this goes back to what I was explaining about the new guideline that the Chinese authorities issued end of last year. Hopefully, things will be much easier now for the supplier with their banks, and they won't need to go to their bank physically every time that they receive an RMB payment from overseas, and they can just submit the documents electronically. Also, like we always advise when we talk to the suppliers that are gonna receive RMB for the first time from their clients abroad, that they always notify the bank that previously they were always exporting in USD, but now they're gonna start exporting in RMB as well, and that the bank would be seeing RMB payments from overseas. So to pre-notify the bank and submit all the documentation to make sure that when the bank receives an overseas RMB payment for the first time, they don't reject the funds or put them on hold asking the supplier for more information. Then last but not least, there are a lot of suppliers that actually have an account outside China, and it's not that easy for them to receive RMB. So how this works is that a lot of companies in China, even though their factories are in mainland China, but because there's restriction on capital movement within mainland China, they will choose to set up an entity outside, most of the times in Hong Kong, because even though Hong Kong is part of China, but it's still one country, two systems. So the funds that you receive in Hong Kong, you can move them freely, send them out. So it's not subject to the same restrictions as mainland China. So de facto, and also because it's very easy to set up an entity in Hong Kong, a lot of these Chinese companies, they will choose to export from their offshore entity in Hong Kong and receive their funds in Hong Kong. But then obviously, because most of their cost base is still in mainland China, they need to send part of those funds back to China. And that's where the problem comes, because normally the local banks in Hong Kong, a lot of times they don't accept you sending RMB directly, you need to send USD. So for this kind of situations where the supplier is actually willing to provide price in RMB, but because of an operational issue, they cannot receive RMB directly, we have actually developed at IBRI a unique solution called Parallel Forward, which I won't go into too much detail here, but basically we give the suppliers of our clients the option to still price in RMB to remove the foreign exchange risk. But the supplier can choose at the time of payment whether they want to receive RMB directly or the equivalent USD, converting the RMB at the current spot rates. So this is it from the importer's view. Moving on now to an exporter that is looking to sell or already selling to China. One of the common issues that we often get consulted by our clients and prospects are how can I get the funds out of China, right? Or how can my client in China pay me directly for my goods? So I think here it's good that we explain briefly what is the Chinese regulation around sending funds out of China. As I've already mentioned throughout my presentation, there are strict capital controls in mainland China, so excluding Hong Kong and Macau, and they only allow for the free movement of funds under certain very specific conditions. So, and I have separated here between business and personal. So if you're a business, right, and there's a cross-border trade of goods, cross-border trade of services, overseas education or overseas conference, as long as you can fulfill one of these categories and you can submit the relevant supporting documentation, you can receive and send funds freely in and out of China. And you can do this directly through your bank. But it's important that you have a flow of goods that is being sent directly from abroad into mainland China, and that the payments are directly done as well from mainland China to abroad. Because the factors and situations we've encountered in the past is that the client, for instance, or the exporter in the UK, they were selling to China, but the goods were not being shipped to mainland China, but to Hong Kong. And then the Chinese client would be paying them from mainland China. So in that case, when there's a mismatch between the destination of goods, which is Hong Kong, and the origin of your funds, which is mainland China, then that's not gonna work, right? Because both flows are not aligned. Then like for personal purposes and outside these categories, each person has a foreign quota of 50,000 USD or equivalent per year that you can be using for. So let's say if you're gonna pay for a trip that you're gonna do abroad, for education, shopping overseas. So for that, you always have this 50,000 foreign quota. But for all the cases that are not mentioned above, this normally requires special approval from the foreign exchange regulator in China, which is SAFE. So here I have put down some examples of can and can't to further illustrate what I just mentioned, right? So UK exporter that is selling chemicals and sending it directly to mainland China. Then there's no restrictions for them to receive payments directly from mainland China through the bank. A Chinese travel agent that is booking a UK trip for his Chinese clients with a UK travel agent and then paying to their UK bank account. Again, there's no restriction because both flows match. Or Chinese parents that are paying for their child's tuition fees in Oxford University. So that falls under education, so that's also okay. Or a consumer in China that is buying on a UK clothing website. So then you would have up to 50,000 USD per annum to spend. But then the cases that you cannot, right? So in the case of the UK exporter selling chemicals, so the example I was giving previously, if you're selling to mainland China, but the goods are sent to Hong Kong, then you won't be able to send the funds from mainland China, but only from Hong Kong. Or this is also a very common category, an investor in China that wants to buy a property in London. So that's also not an authorized category, and you need to do a special filing with the local regulator and get a special approval in order to get your funds out of China if you want to do it in a compliant way. Then if you're a UK company that has set up a subsidiary in mainland China and you're selling locally to your clients in China, in terms of like profits repatriation, there are few ways that you can do that, and it's possible, but there's also like certain limitations. For instance, that you can only send dividends once a year, and then you need to go through quite a lot of paperwork with the local regulator. So it's not like as straightforward as the previous cases where you can directly go to the bank and then send those funds out. So how could IBRI help with the exporter side? one of the services that we provide is that we enable the exporter to directly invoice their clients in China in RMB. So this is not gonna solve the problem of sending funds out of China, because sending funds from mainland China to Hong Kong, it's still considered cross-border, but then you save your client in China certain paperwork in terms of having to exchange their RMB into British pounds or whatever currency that you are selling, and they can directly send RMB. So how this would work is that we could provide an RMB, so in this case would be CNH, so offshore RMB account in Hong Kong under the exporter's name, so that the Chinese client can directly send an RMB. And the payments between mainland China and Hong Kong are super quick. Normally, like you receive it within an hour or two. And then because of the time difference between Asia and UK, you actually will directly receive those funds into your local bank account in the UK at the same day, thanks to the time difference. So this is a way for also as an exporter to increase your competitiveness, because you're actually invoicing your clients in their own currency, and also saving them some trouble of having to exchange the currency themselves at the bank. So to summarize my presentation, how IBRI would be able to support you both as a company that is sourcing from China or exporting to China. So if you're importing from China and you want to consider about discussing with your suppliers paying in their local currency, IBRI can offer you foreign exchange risk management tools. So we can help you hedge your exposure for up to 5 years. We have a specialized RMB team and suppliers liaison services that helps you to communicate to the suppliers on your behalf to explain why it would make sense to transact in RMB and what would be the different implications with the bank, with the VAT and all that. And we can enable you fast payments into your supplier's bank account in 24 to 48 hours. Because actually this is a corridor that we specialize in, and we've been delivering RMB payments for quite a few years now. If you're a company selling to China, to recap what I was mentioning, so we can equally help you hedge the RMB that you receive from China into sterling, pound, or your desired currency, and we can give you an account under your name in RMB in Hong Kong, so that you can receive funds instantly and don't have to worry about the exchange rate, because we can also help you convert the RMB into cable and directly settle it into your designated account in the UK. So this is pretty much everything from my side. Thanks a lot for your time and for listening to my presentation. I hope it was useful to you. And we still have some time. If you guys have any further questions or comments that you would like to make, feel free to use our Q&A box that is at the bottom, or our chat box. Thank you.
Well, thank you for that, Isabel. It was a really interesting overview of China's payments and kind of getting money into and out of the country, which we do know is a challenge for some members and clients that we speak to. I mean, one of the questions that does often come up is around the documentation requirements. I mean, are you able to talk a bit more about that? You know, what needs to be provided in order to kind of allow the free flow of cash? Sorry, are there any kind of language things that need to be kept in mind?
Yeah, so actually the documentation depends on the reason of your payment out, right? So if we're talking about like the authorized categories by the regulator, then it's actually like pretty straightforward. So you need to go to the bank and fill out some forms where you basically explain whether this is B2B, B2C, like what is the payment for which sort of goods, and under what category it falls, whether it's goods, services, education, and then you submit the relevant documentation, which if let's say it's an export of goods, then you will have to provide like your invoice, your purchase order, your bill of lading, and all this documentation. So that's directly with the bank, and it's quite straightforward. But then like, let's say if you're talking about repatriation of profits, right? So that gets like much more complicated, because you cannot directly go to the bank and then just do it. You actually need to go to the local safe office. You need to, because I was just saying at the beginning that you can only do it once a year. And actually you need to do that once you've closed like your annual accounts. You have to show like where are the profits that you're sending back to your parent company, whether it's in the form of dividends or elsewhere. There's actually like a few options there. So, because I'm not like a lawyer or expert in this area, I'm not really able to like comment a lot in detail, but it is like a lot more work. I mean, it can be done, of course, because obviously like the Chinese authorities are trying to open more and more to foreign investment and attract more companies to sell in China, but it's not like a very straightforward process. And if you talk about like, you know, other areas like investment, like M&A deals and stuff like that, that I think right now it's like highly restricted, and you really need to go like case by case basis with the regulator.
And I mean, in terms of the language of the actual documents, because I mean, you know, it obviously depends where you're trading, but sometimes both your Chinese counterpart, but also the banks that you're dealing with don't necessarily have great English language capabilities. I mean, is it worth filing in Mandarin, or is it kind of incumbent on the bank to kind of translate the documents? And yeah, what's the easiest way of kind of getting the payments through? Because, you know, you don't want to get stuck where you can't get the money out.
Yeah, because de facto, actually, like most of companies and people in China, they speak limited English.
Yeah.
So it's great, like, you know, and actually, like, I'm almost sure that it's a requirement, like, from the bank, right? That if you have the documentation in English, that you can translate it. And then the form that I explained that you need to fill out, that form is in Chinese.
Yeah.
So you need to like fill that in Chinese.
Okay, cool. One of the things you mentioned was, you know, there are certain sectors where suppliers are only accepting US dollars. So for example, you gave the example of a tire manufacturer, right, where their cost of goods are in a US dollar denominated expense. For someone like that, are you typically finding that they are that they would keep the funds offshore the entire time? And so, for example, try and trade using US dollar account in Hong Kong, or are they actually bringing the US dollars into China and then, do you know what I mean? Because obviously there's more processes involved if you have to move it across the border. Yeah. So previously it was like quite a trend to like set up an entity in Hong Kong and directly process your funds from Hong Kong. What happened in the latest years is that banks are getting more and more strict in terms of like opening new accounts for Chinese-based companies. And also they've been closing a lot of accounts. Yep. So for the companies that traditionally they've already got like an entity set up and a bank account, yes, that would be like the option that most of them have of receiving like those funds directly into Hong Kong. Because apart from that, you can move the funds freely. There's another important consideration, which is that you can hold your foreign currency for quite a bit of time. Because what happens is that if you were to receive USD in mainland China, you cannot hold this indefinitely and say, okay, because now the USD is weak versus RMB, I'm gonna wait, hoping that the USD is gonna go back up, right? Yep. So you cannot do that. So you are obliged within a certain period of time, that is around like 1 to 2 weeks, you need to settle your foreign exchange and convert it back into RMB. So for companies that would like to hold on a bit more to their foreign exchange currencies, then
they would have that in their bank account in Hong Kong. And the Hong Kong banks actually, they give you multiple currency accounts. So you can hold GBP, you can hold USD, you can hold Euro, and then keep it for as long as you want. So not only like, let's say for the tires industry that they need to source raw materials from abroad, but even for other companies, although their factory and their cost base is in RMB, they still like have a lot of times an entity in Hong Kong or sometimes even in Singapore, because both like Hong Kong, Singapore, it's relatively easy to set up an entity. It takes you literally like within a week to set it up.
Yep, that makes sense. One final question that I've got is just around the VAT, because that is another area where people get caught out, not realizing that actually VAT is payable and then claim, you can claim it back. So I mean, so what we advise at the China Britain Business Council is to generally ask the Chinese party to pay the VAT. And because it's 16.5%, and then they can claim it back. Is that kind of the best approach that you've found as well? Kind of any tips and tricks when it comes to VAT and China?
Yeah. So the thing is that the trading scene in China is quite complicated. So that's why like a lot of times our clients ask us for help when because when they talk about RMB, a lot of times the suppliers mention about VAT and about taxes, they're not really sure what they are referring. So the proper way to do it is exactly what you described, Chris. So you're a company that does manufacturing plus trading or trading, and you have like the export license, right? So you send the goods from your company, you pay the VAT, and then you get your VAT refund. But then you have as well like a big percentage of the export trade in China. It's coming from like small companies a lot of times. So there's a city in China in the southeastern part, which is called Yiwu. So Yiwu, that's like a big concentration of like small companies that they are trading companies that sell like goods that have like a lot of different SKUs, like little value. So what happens is that they would normally not go through the VAT process for those, and they will not ship the goods themselves directly. They will rely on like a trading company or someone else to send those goods. They don't really issue like an official invoice, and therefore they don't pay VAT. And then like you have all these issues later on they're not able to accept RMB because they're not paying like all the taxes and VAT that they should. And a lot of times these companies, they would have an offshore account. Because one thing to mention here is that not only you can open offshore accounts outside China, you can also be like a company that sets up an entity in Hong Kong, but then you choose to open an offshore entity within mainland China.
Yep.
So that's still, even though it's in mainland China, it's considered an offshore entity. So de facto, for instance, a lot of these EU small and medium exporters that work with companies abroad, they will have this sort of arrangement, which is like not exactly like 100% proper, and there's these like VAT and tax issues that you are mentioning.
Yeah, that makes sense. And then in terms of service providers, right? Because with a service, it's not when a good kind of gets on a boat, it's left the country and it's very clear, and then you can obviously claim it back because you've got a bill of lading, etc. Is it as straightforward for a service provider in terms of offering services into the Chinese market? How does the VAT work in that regard?
Yeah, that's it. Yeah, because what happened as well is that so depends on how you're selling, right? Like if you're selling on a cross-border way, or if you're selling through your subsidiary in China, because in that case you also need to pay like your local VAT, right? Like and then when you sell, let's say like if you sell cross-border from the UK into China, then your local client, they will need to also like I think pay like certain VAT as well and taxes.
Yep.
and also like when you sell locally. So I mean, there's this concept in China, we call it in Chinese 发票. 发票means like invoice, but it means like proper invoice. It's like a government issue, like standard template with the seal. So you're supposed to like have all your goods and services recorded in a 发票, which is the official invoice document. So that's the way how you ensure that you have paid your VAT and everything is in compliance.
Gotcha. Understood. Well, I think, I mean, as is illustrated, it can get fairly complicated, which is why, you know, it's always good to talk with service providers like yourself, Isabel, and kind of get a bit of inside knowledge as to how it all works. Well, look, thank you very much for speaking with us today at CBC and kind of talking about how one gets money into and out of China, because, you know, it is an issue that we see quite often here at CBC. I think there's a bit of confusion with all the different rules and regulations and documentation needs to get done. And so just having a good overview of what's involved is really helpful. I'm just going to quickly share my screen. We've got one more upcoming event as part of this series, which is about managing and sourcing products and quality control in China. So there's obviously a lot of companies who source or actually produce in China for either the Chinese domestic market or for international export. Obviously, it's pretty hard to kind of make sure that quality is up to standard if you can't actually go out there and inspect things yourself. So we're working with PTL Group on that webinar on the 2nd of November. But Isabel, once again, thank you very much for talking to us today. If anyone's got any questions for Isabel, I can help connect you. And obviously we've got your email details from the presentation today. But thank you very much.
Thank you, Chris. Thanks, everyone. Have a good day.
You too. Bye.
Bye.